There, welcome to Safe Option Strategies. My name is Jeffrey Dunyan. I am the owner and founder of Safe Option Strategies, and I appreciate you taking some time out of your schedule to watch our presentation. As I get started on this, I recognize that a lot of you have seen our presentation before. A lot of you know a little bit about what we do at Safe Option Strategies. Some of you that are watching this right now have actually inquired about our pricing before. And that's fine. I'm glad to have you back. I'm glad you're still looking for something. I want to really quickly, I'm going to make this introduction really short, and I'm going to get right to the point. There are ways to protect and grow your money at the same time. Now, one of the biggest challenges, when I ask that in the question, how do you protect your money and grow it at the same time? If this is your most recent experience, even if you're not thinking this conscientiously, subconsciously, your mind is telling you, what are you talking about? Why do I need to protect and grow my money at the same time? My money is doing nothing but growing. This market has been on an absolute tear. I've got a picture on the screen right now of a 6-month chart for the Dow Jones Industrial Average. And after wobbling a little bit back in September and October, it's been almost straight up. And if you were to take a picture of this same stock chart and expand the time frame on it and go back to April of last year, when we started to pull out of the major sell-off from the pandemic, this thing looks like you almost don't even notice the little times where it wobbled a little bit. It looks like a chart that is almost going straight up with very little variation. These kind of things are easily get lost when you put them in the larger perspective of a market that's been almost seemingly straight up. And here's one of the challenges, and I want you to really think about this as you watch this presentation and learn about some of what we do at Safe Option Strategies. I really want you to think about this. When the market is going straight up, everyone feels like an expert and no one needs any help. And that's just a fact. Even people who are a little skeptical about the market, even people who have been burned before and have lost money in the market before, when you get on a run like we've had these last 3.5 months, it's hard to imagine wanting to spend money or take time or invest anything really in an education on how to avoid the pitfalls of the market, how to protect yourself from big market sell-offs, how to make money and profit even when the markets get a little bit shaky and get a little bit wobbly, or especially if the markets pull back in a really dramatic way. I want to show you something, and this should look a little bit familiar. This is the 6-month chart that includes the major sell-off that we had when the COVID-19 pandemic hit last year in January and February. And it was right around that end part of February that the news started getting really bad and we started having a major sell-off. Do you know this was the largest 1-month sell-off that the Dow Jones Industrial Average, along with the NASDAQ and the S&P, the largest 1-month sell-off that they have ever experienced in the history of the U.S. market being open? Do you know in the Great Depression, even though it was a longer bearish move in the market, larger drop, longer period of time, there wasn't a 1-month drop as steep as this one? You know, back in 2008, the worst bear market we've had in almost 2 decades. Almost 2 decades, worst bear market we've had, 2008. Do you know there wasn't a single solitary month where the market dropped this big a percentage? And even though we've come back up, and in recent days, the Dow Jones Industrial Average has hit all-time highs, the NASDAQ has hit all-time highs, S&P all-time highs, it seems like every day in the market, we're hitting a new all-time high. Add to that some of this crazy wild stuff that's going on with brokers like Robinhood and stocks like GameStop and AMC and Nokia and some of these other companies. I mean, things are getting wild. And for every story you hear about someone who's really made a lot of money and done really well in this market, I promise you there are still some people struggling, and probably a much bigger percentage than you would know about. I have conversations with people every single day that are looking for a way to either protect the money that they've made, or at the very least, not take a bad loss next time something really turns on them. And they're even though the markets have come back, there's people that are still reeling from what happened back in March of last year. Now, I'm going to share as an introduction to what I'm going to talk about for a little while in this presentation, and kind of give you an introduction and a taste of what we do here at Safe Option Strategies. I'm going to tell you a real quick story. This is a true story, and this is why I absolutely believe the best time to learn what we're doing and how we're doing it is when you're in the midst of a bullish run like we have going right now, when you've made some money, when you've got some profit. Before you lose it, before it slips away, learn the different ways that you can protect it and keep it growing at the same time. I got a call after watching a presentation just like the one you're watching. I got a call from a gentleman right back at the end of October. In fact, I believe it was Halloween Day that he called. It's either the day of or the day before, because I can't remember right now if Halloween was on a Friday or Saturday last year, but it was right around Halloween. It was that last trading day of the month of October. And he called me up, and he had just watched a presentation like the one you're watching right now. And we talked about the program. We talked about what he was doing in his trading. This gentleman had in the neighborhood of $300,000. It was his life savings, everything, his retirement, everything he had put in the market was about $300,000. And he called me up. He asked about the program. And at the time, the cost of our program was $2,500. Now, we've got a way better deal for you than that I'll introduce you to at the end of this presentation. I'll tell you how you can learn everything that we introduce and everything that we talk about right now for a phenomenal price. It's going to absolutely blow you away. But he said $2,500 was way too much, didn't want to pay that much and that was the complete education. That was everything we have, all the bells and whistles. Didn't want to pay it. I said, okay, I understand. Called me 3 months later. 3 months later, he called me up, had watched another presentation like this. And he told me that he had made a bunch of money in the last couple of months, last 2.5 months or so, and things were going good. And he's still kind of interested in our program, kind of wanted to, see if we were offering any kind of a better deal. I think I even offered to shave a little bit of money off that price. Still way too expensive. That was what he was saying, is way, way too expensive. Not going to spend that kind of money. Called me after a little dip right here. We had just this little tiny dip halfway through January. Not too big a deal. The Dow Jones Industrial kind of crossed over technically to the bearish side, but didn't stay there for very long, rebounded back up. He had lost a little bit of money right here, not a lot, still doing okay. And then he called me right here. And when he called me right here after one of the worst weeks the market has ever had, and it wasn't even the worst of the weeks to come yet, one of the worst weeks the market had had in years, he called me up. Now, here's the key to this story, and this is a true story. Between right here and when he called me right here, out of he had built his account from here, his 300,000, I forgot to tell you, right around here, he told me that he had topped out around 340,000 right there. Had a 3-month run where he was up over 12, 13%, phenomenal run. I congratulated him. I said, that's great. He lost about $50,000 in this move right here. Now, the temptation on my part was to say, remember when you thought this was way too expensive, and I could have saved you 99% of that. Maybe 100% of that. I could have probably helped you profit as that fell a little bit in that first week of what we all now know as the COVID-19 sell-off, the pandemic sell-off. $50,000. He called me again right here after the market had made a little bit of a bounce to the upside, and he was all back in bullish at this time. He was convinced that everything was going to recover. And 2 days in a row, it had another big slide. And by the time he called me on this day, and I'm not making this up, still telling me that my education at Safe Option Strategies was way too expensive, he had lost $215,000. Now, even though this was only a 34% drop, and what he lost represented closer to 75% of his portfolio, He lost that much because every time things started to turn and looked like they were going to come up for a day, he would reposition and just make everything worse. Now, I genuinely feel bad for this individual. I'm not sharing this story to pick on him. I'm not sharing this story to try and scare you into anything. What I'm telling you is that nobody needs help when we're in a strong bullish trend. Nobody feels like they need any kind of help in trading. They have all the answers. They know everything. And then when it turns, everybody's wishing they had had the help. You remember 2008? Maybe you weren't trading back at that time. Maybe you were. Maybe someone else was managing your money. 2008, worst year the stock market has had in at least a couple of decades. And even 2008 was easier to manage because this was a 50% slide from the highest to the lowest spot, but it took place over a little bit more than a year. It took place over about a year and 4 months. That was easier to manage than a 35% sell-off in less than a month. Now, we're in an amazing bullish run right now in the market. We have recovered, so the stock market has more than recovered from that sell-off that was related to the COVID pandemic, from the economy shutting down. All the political turmoil, all the civil unrest, some of the crazy wild things going on with some of these companies and some of these brokers, and the stories you hear about the people making money, the people losing money with these different, wild trading things going on. It's amazing to me that we're still in such a bullish trend. But I got to tell you, folks, I've been trading actively since a little after 2000. And I traded a little bit in the 1990s, but I really didn't know what I was doing back then. I've traded very actively, and the stuff I'm going to show you for the next 30 minutes or so is what I've been doing since shortly after 2000. And I got to tell you, everything going on in the market right now today feels to me like it did in the early and middle part of 2007, when we just didn't think the market could ever stop going up. It just felt like we felt like we were invincible. We felt like there was never going to be a big long-term correction again. We were never going to see another 20% bearish market. And then 2008 hit, and a lot of people lost a lot of money. This put large brokerages, Bear Stearns, Lehman Markets, this put large, Lehman Brothers, sorry, not Lehman, Lehman Brothers, Bear Stearns, large brokerage firms, large companies managing billions of dollars went out of business because of this sell-off in 2008. Now, I don't know if we're on the cusp of that again. I'm not even saying we're on the cusp of that again. I'm telling you, it feels like it's close. There are things going on in the economy right now. There are things going on with government spending, with jobs being lost. I'm not trying to get political here, but some of the stuff that's going on right now is not good for the underlying fundamentals of this economy. And no matter how much money we pump into it with stimulus packages and how much the Fed tries to keep interest rates down and artificially keep the market propped up, the time is going to come when we have to pay the piper. That's what happened in 2008. Everything came together in this perfect storm, and it was time for a major market correction. I think right now today we are way overdue for a major market correction. I could be wrong. People that say they can predict that kind of stuff, I think they're full of bull. I don't think you can. I can teach you how to prepare for it so that if it happens, you're not going to lose anything. You're going to profit off it. And then when it recovers, you're going to profit even more. Can you imagine back in March of last year, February, when everything sold off, if you had just maintained a flat account balance and then you benefited from every single uptick of the market since the end of March until right now? You realize how much better off you'd be than the people who lost 35 or 40% and had to get back a gain of more than 65 or 70% just to get back to break even. When you lose 25%, folks, a 25% gain doesn't get you back where you were. You need a 50% gain to get back to where you were. Okay, if we have another sell-off that takes this market down 20, 30, 40, 50%, 20, 30, 40, 50% return doesn't get you back to where you were. You need 100% return to get you back to where you were. But if you didn't lose a penny on the way down, that 20, 30, 40, 50% return makes you more profitable than anybody out there. And you can do it in a very safe way. Let me explain to you exactly how you can do this. I'm going to try and be brief in explaining to you because our program teaches you how to do this. My goal in this presentation right now is not to teach you everything. I want to show you how we can help you do this. And it's actually very, very simple. Folks, we teach people how to collar trade. That's one of the things we do. Now, for those of you that don't like to or don't want to own stock, number one, I'm going to show you why you should rethink that. Okay, I'm going to show you why you should reconsider, even with a small portfolio. Would you believe me right now if I told you that with a $2,000 portfolio, there's a chance you could double your money in the next year and own stock, not have to rely solely on option trading? See, most people think the only way they can do something like that is if they trade options. And options are a lot higher reward. They're a lot more risk. You've got to be really careful wading into those waters. I'm going to, in a minute, after I show you how we protect your stock and teach you how to be incredibly safe in the market, after I do that, I'll show you how you can do it with options only. But understand it comes at a little bit more risk. One of the main things we teach at Safe Option Strategies is how to collar trade, how to use stock ownership, a long put option used like an insurance policy, and a covered call, a short call used to pay for the long put. The purpose of the short call is to get someone else to pay for your insurance. Imagine if you went out and bought a $75,000 Tesla and you are going to insure that thing. You're not going to go, I don't care if you're rich and have millions of dollars. I don't care if it's the most expensive car you've ever bought and more expensive than you should have bought. There's no way you're going to buy a $75,000 car and not get insurance on it. How great would it be to have someone else pay for that insurance? You got to think back to when you lived at home or were in college and mom and dad would pay for the insurance, right? So the long put is the insurance policy. The covered call is someone else paying for the insurance policy. And the way it works is very simple. If the price of the stock goes down, the value of the long put goes up proportionally, and you don't lose any money. How fantastic is that? And if you get into a position like this and the stock goes up, you make sure before you ever enter the position that you've got your covered call, your short call, in a place that allows you to still make money. When the stock goes down far enough, you have the option of selling your stock, or you can sell the long put, use the profit you made on the long put to buy more shares of stock. And then when the stock starts to go up, you've got more shares for less money. You ever heard of dollar cost averaging? I'm sure if you're in the market, or if you have been in the market for very long, you've heard of dollar cost averaging. You buy a stock for $100 a share. Stock goes down to $80. You buy another share at 80. Stock keeps going down. You buy another share at 60. And when you've got these three shares of stock, you've got $100, you've got $80, and you've got $60. You've got a $240 investment, and you divide that $240 by three shares, your average price per share is $80. So if the stock starts to come back up, it doesn't have to get back up to 100. You're breaking even when it gets back up to 80. And this is a wonderful way to trade. This is a very smart way to trade. Problem is, some stocks come down and they never recover to where we want. And sometimes you run out of money on the way down. Well, consider this. With what I'm showing you right here, and I'm going to show you a couple of real examples of it. What I'm showing you right here, when you buy that stock at $100 and it drops down, you sell the long put, and it's this money that buys the next share of stock. So number one, you don't need to come up with more money to buy those next shares. And number two, you lower that cost basis way, way farther down, so the stock doesn't need to come up nearly as far to be back to a break even. Let me show you how this works. a student of mine, one of the members of Safe Option Strategies, joined our program after he joined. I believe it was in June or July of 2017, but several months prior to joining our program, he bought shares of Snap on their IPO, and he got into 300 shares for about $7,200. So right up here around $24 a share, not the highest it was at on its IPO, but not the lowest. He got into some shares. And unfortunately, for the first few months that he owned those shares, that thing just went down. It just went down and down and down and down and down. And it was around July of that year that he joined our program. And the first thing that we helped him do was set up a collar trade on Snap. Now, he'd already suffered a loss. He was concerned about that, but we helped him protect everything. So for the next 5 or 6 months, while the stock was still kind of volatile, we made sure he was at least protected. He experienced some ups and downs, didn't make any money, but didn't lose any more money. Then Snap had a big earnings report and shot way up. But when it started to tip back down, we made sure he had a collar trade in place. And he made some money from those long puts on that collar trade. And with the profit from those long puts, this is key right here, no added investment. He was still $7,200 into this position. That's all. But he added 100 shares without having to spend any more money. Sold the long puts, used that profit to add more shares. Got a little bump in the stock, and then they suffered a pretty good sell-off. He had a collar trade in place. When it started to turn around, he added 500 more shares. The long puts that he had in place for this drop right here made him a lot of money. Now, the stock that he had lost a lot of money, but he was able to add another 500 shares for no added investment at all. His investment in the trade was still at this time only $7,200. Snap has had a pretty amazing recovery since then. A couple little dips back down, but overall a pretty amazing recovery. When Snap got back up to $18 a share in July, August of 2019, he had gone from 300 shares originally to now having 900 shares, but his total investment in the trade was still only $7,200. That means that with 900 shares at a value of $18 per share, he was 120% profitable. Now, here's what's so key about this. He originally bought around $24 a share. At this point in time, the stock was trading at 18. You want to do the math on that real quick? A $6 loss divided by a $24 investment, the stock was still down 25% from where he originally bought it, and he was up 125%. Continued doing the same thing. Pandemic hit, had a collar trade in place, protected it, added 400 more shares after it turned and started coming back up. You don't do this when it's still dropping. And we teach all of the things to look for in the way of technical indicators and fundamental analysis and all of that. And when he shared all the details of his trade with me, okay, we helped him back here. We helped him get everything set up back here. And there were multiple times along this journey that he was calling and saying, okay, I'm doing this now, I'm doing this now, I'm doing this now. But it wasn't until July of 2020 that he shared with me exactly where he was at. And let me get my pin marks off of there. In July of 2020, a little over 3 years after he had originally purchased the stock, he was up to 1,300 shares. The stock, for the first time since he bought in, was back above where he had bought. And he was profitable 376%. Now, here's the real moral to this story. A buy and hold trader getting in at $24 a share, 3 years and 3 months later, would have had a profit of $2.41. And when you divide that by the $24, after 3 years of having your money in this company, you would have been up 10%. He was up 376%. You know, Snap is trading over $45 a share right now. And I haven't checked in with him to see what he's done since then. But I know the stock is now trading somewhere in the neighborhood of $45 a share. Let me do the quick math on that. If he did nothing else since July of last year, and the stock was at $45 a share times 1,300 shares, he would now be sitting in a position worth $58,000, $58,500 to be exact. When you subtract from that the $7,200 that he started with, that's a profit of $51,300. And if you divide that by the original $7,200 investment, he could, in theory, be up 712% right now today. I need to check in with him again and see how he's doing. I have a feeling he's up 600 to 700% in this position. And folks, his original investment was not huge. Now, this I'm even more excited to show you about. Believe it or not, I'm going to give you an example of a 17-year-old who's making this work for him. My son came to me. He knows what I do for a living. He knows I trade actively and I teach people how to trade. After a couple of summers in a row of having a summer job, and partway through his junior year, he was working part-time before the pandemic shut things down in the second half of it. He came to me, and he had a little bit of money. He'd spent a little bit, but he had saved a little bit. But he came to me and he said, "Dad, I want to get it in the market. What do I do?" And I said, well, we looked at what he had, and I said, "You know what, son? You have enough money saved to get 200 shares of Ford." It was trading around $8.50 a share right at the time he came to me. I said, "You've got enough money to get a couple hundred of shares." Honestly, I had to put about $200 with it to get him there. I was happy to do it. He got 200 shares of Ford in October of 2019. Saw it go up in profit a little bit. He got a little bit of a gain, got up around $9 a share, had an earnings report coming up. So we got a collar trade in place on his Ford shares. And guess what coincided right around the same time Ford reported their earnings? We had a pandemic hit. Now remember, I said I couldn't predict this, but this is the way we trade all the time. This is the way we trade. So when things sold off pretty dramatically, he had long puts that had gone way up in value, short calls that had paid for him, and even though that stock lost a lot of value, lost more than 50%, $9 down to $4 a share at one point in time. When it appeared it was going to start coming back, he added some more shares, and he had enough money when it was right around $5 a share. He had enough money to add 200 more shares. So he essentially doubled his position, got a nice gain, protected it a little bit, had a period of time where it was flat, bought some long puts, sold some long puts to close them, rolled some short calls. There were things that we did during this time. We didn't just sit there wondering and waiting. Ford had a really nice run to end the year last year. And around the end of November, first part of December, he had 400 shares of Ford, up a whopping 75 cents from where he originally purchased them. But he's got 118% growth in just over a year. Now, this is the critical thing in this example. You don't have to have a ton of money to do this. You don't have to have a $60,000, $80,000, $100,000 portfolio. You don't have to have a $500,000 portfolio. My son did it with $1,700, folks. And I can teach you how to do this. Now, for those people who are interested only in stocks, they want some income, they want some lifestyle, or excuse me, for those people that are interested only in options, they're looking to generate some monthly income. They're not as interested in the longer term growth. They want to start churning and burning. How can I take this $100,000 portfolio and how can I start turning it into $2,000 or $3,000 or $4,000 of income every single month. Well, you're going to have to learn how to spread trade if you don't already know how to do it. And more importantly than learning how to spread trade, you're going to have to learn how to adjust trades. Let me tell you one of the things that over the 16 years that I've been doing this, let me tell you the most common story that I've heard from people. Everyone's story is a little bit different, but there's a common thread in probably 75 to 80% of the conversations I have, especially with people that do primarily option trading. And this is what they tell me. Jeffrey, I'm winning on about 3 out of 4 trades that I place, but that fourth one that I'm losing money on, it's killing me. It's wiping me out. I'm losing all the profit from those previous 3 and then some, or I'm barely treading water and barely staying flat. And every time I think I've got it down, something happens and I just get cremated. The key to getting past that, if you want to option trade only, there's a couple things you have to learn. Number one, you've got to get better at picking the right trade at the right time. And I'm going to burst the bubble for some of you right now. Stop doing credit spreads. There are a dozen competitors that I have in the investment education world that tell you credit spreads, credit spreads, credit spreads. Get paid to be in a trade. Let someone else pay you money to be in a trade. Folks, it is the biggest farce. It is the biggest hoax. It is the biggest line of BS, and it is the most dangerous way to trade in the markets is to just do credit spreads. I promise you, if you are just doing credit spreads, the time will come that you are going to get severely burned and you're going to take a big, giant loss that is unrecoverable in your portfolio. Now, lest I be a complete hypocrite, I occasionally use a credit spread, but the conditions have to be almost perfect, and you've got to learn the concept of adjusting trades and managing trades. Every time you enter a spread trade, you have an expectation of what the stock is going to do, up, down, or sideways, or maybe a variation of that, up really fast or up slow, down really fast or down kind of slow, flat for a long time or flat within a very volatile range. Regardless of what your expectation is, you've probably got, on most cases, a 30% chance that the stock is going to do exactly what you want it to do. You better be prepared for that other 70%. And it's through a concept called trade adjusting. We set up a trade back in September of last year on Amazon, and we got in the trade with the expectation that Amazon was going to keep going up. They were having an incredible bullish run. We thought it was going to keep going. We had had several successful trades on Amazon over the previous few months. We set up a trade right here. We got a couple of days of upward movement. All of a sudden, wham, they were coming down and coming down fast and sharp. And every time you enter a trade, this is a possibility of this happening. The concept of trade adjusting is simply knowing when and how to roll one or both of your options to a different expiration date or a different strike price, creating a different spread trade that now matches the new direction of the stock. Okay, now that's a mouthful. I know that's a mouthful. Folks, I've been teaching people how to do this for 16 years. I can teach you how to do it. I can teach you how to take a spread trade that is going against you, and I can teach you the right time and the right way to adjust it to match the new direction of the stock. And there is a definite science to it and a little bit of an art to it. And I can teach you how to do that. Okay, folks, you can learn, you can protect what you already have, and you can profit all at the same time. If there's anything that we've done at Safe Option Strategies in the last 16 years that is our little niche that we've carved out, I would tell you that there's 2 things that we've done that I feel like are unique to Safe Option Strategies. Okay, number one, I believe we are more consistent and better at teaching people how not to lose money. Our focus is not on making you rich overnight. Our focus is not a get rich quick situation. In fact, I tell people, if what you're looking for is get rich quick, we are not the right program for you. Can you imagine the owner of a company saying, we might not be the right fit for you? I'm telling you, if what you're looking for is get rich quick, we're not the right fit for you. We've carved out a niche in helping people learn to not lose money. And once you learn to not lose money, making money is easy. The other niche that I believe we've carved out over the last 16 years and really gotten good at is the right balance of education and help and actual trading, the hands-on trading. You've all heard this before. I know you've heard this. Feed a man a fish, you feed him for a day. Teach a man to fish, and you feed him for life. Folks, that is a great adage. I love that saying. I have loved that saying since the very first time I heard it. I thought, man, that is right on the money. Feed a man to fish, and you feed him for a day. Teach a man to fish, and you feed him for life. You want to know what the problem with this is? What happens if the man starves while he's trying to learn how to fish? I've got a really good friend of mine who is one of the best fishermen I know. If he ever wanted to take time away from what he does for a living and get into some of these fishing competitions or tournaments, I'm pretty sure he would be really, really good at it. He's a great fisherman. He's taken me out with him lots of times. And he has earnestly tried to teach me how to fish. And I've gotten better over the years. I really have gotten better. But I watch him cast the line, and I think I'm casting it the same way. He explains to me the places he's casting the line to and why. He looks for the little eddies in the river, or wants the bait to be a certain distance off the floor when we're fishing in the ocean. And we've done both. We've done a few different things, but he explains all of it to me. His explanations are wonderful, and I do what he's doing, and I think I'm doing it just right. And he'll pull out fish 10 to 1 over what I will do. Even when I think I'm doing everything just like he is, I'm not getting the same result. Now, I'm still learning. I'm getting better. For me, it's going to be a lifetime process. But here's the point that I ultimately want to make with this. If he and I had to go out in the wilderness and survive off our ability to fish, he would be fine. I would starve to death. Unless I could go with him, and unless he was willing to keep me fed until I got good enough at it, I would starve, and he'd be fine. The right balance of teaching you how to do this, but keeping you well fed, is the niche that we've carved out at Safe Option Strategies. We have over 60 streaming classes in our program that teach everything that you need to know about option and stock trading, from the very beginnings of how to place a trade all the way up to the most complex strategies you can imagine. And more importantly, how and when and why to adjust those strategies. We send out multiple weekly trades. See, here's the teach a man to fish. Here's the feed it. Feed them while they're learning how. Keep them fed, so that if they learn really fast, they're fine. If it takes them a while to learn, they're fine. Multiple times every week, we send out trades that you can simply duplicate in your portfolio if you choose to do that. We have daily live classes where we talk about these trades. We talk about what's going on in the markets. We talk about what the next step is. We're very interactive with our students. We have an open chat room that's open all day long for any of the members of our program to get in and get help. And there is not a member of our program anywhere in the country or anywhere in the world that cannot pick up the phone and call if they need help with something. Folks, this was an unbelievable year. If you survive this roller coaster, if you were fortunate enough to survive this roller coaster, take advantage of the fact that we've had this phenomenal bullish run and learn how to do this now and get the help protecting your portfolio now instead of waiting for the next time the markets drop. From a marketing standpoint, look at this chart right here of 2020. Do you want to know what Safe Option Strategies' best month was from the point of new people joining our program. Do you want to know what our best month was for the entire calendar year? March and April. And it saddens me a little bit that it wasn't until people had experienced this that they said, maybe I should get some help so that I don't lose another 35% or another 40 or 50%. Maybe I should get some help. Take advantage of the fact that we've been on this phenomenal bullish run and learn how to be positioned next time something like this happens so that you just smile. How would you like to just smile all the way down? That's a horrible smiley face. That's what I get for trying to use a pen to draw on a computer screen. There's a chart of 2008. I'm just being honest with you. Again, it's not a scare tactic. I'm just being honest with you. We are in for a repeat of 2008, folks. It's coming. It is coming. It's coming within the next couple of years. If I'm wrong, I'll help you make a lot of money. If I'm right, I'll help you save a ton of losses and still make money. In 2008, when the three major indexes were down an average of 50%, we helped our members of our program have about a 25% return that year in the stock market. Comes the part of the presentation that hopefully you've been waiting for, and I hope you're a little bit excited about this. Let me tell you, now that I've shown you an introduction into what we do and how we do it, and folks, there's so much we can teach you about how to be safe in the markets and how to trade profitably. Let me show you what our pricing is. Safe Option Strategies lets you buy the collar trade course as a standalone program if you're not interested at all in spread trading or option only trading. This is typically for the very ultra safe investor that wants to protect their money above and beyond everything else. You can purchase the program in an annual membership or a semi-annual membership. If you are strictly interested in spread trading, you don't want to own stock, you don't want to do the collar trading, you just want to spread trade, you can also purchase that in a semi-annual membership or an annual membership. And if you want to combine both of them, which is probably what 90% of the people do that join our program, they combine both programs. Again, we have a semi-annual or an annual membership. Now, only for those individuals that have watched this program, these are the prices that anybody could go onto our website and see, and anyone can go onto our website and make a purchase. Only for those individuals who have watched this presentation and watched it all the way to the end, we're going to do something from now until the last day of the month, and that's coming up in less than a week. From now until the last day of the month, we're just going to take the annual membership and make it less than the cost of the semi-annual membership by knocking 50% off of that price. So this is the price that you could get on any one of these programs, the collar trade course by itself, the spread trade course by itself, or the combined program, which includes both courses. You can get an annual membership for half the price of what we normally sell it. And then, in addition to that, only for those individuals who will take the time to email us or call us. You can do either one. You can email us at info@SafeOptionStrategies, or what's even easier than that, if you just scroll down below where this video is on the web page that you're on, you just scroll down below and there's a form that you can fill out where you can enter in your name, phone number, only if you want us to call you. It's optional to put a phone number in there. We're not going to bug you with a phone call unless you put it there. And I will assume if you put a phone number in there that you do in fact want a phone call. So put your name. You have to put an email address that we can respond to. Otherwise, we have no way to tell you what this additional discount is. So make sure you put a valid email address in there. And then you have a space to type any questions that you have about the program. So phone number, name, so I know who you are, phone number only if you want me to call, and email address so that we can get back to you. And for anyone who will either email us at this email address, fill out the form, or give us a call. This is a toll-free number, 888-690-6199. Leave us a message. I promise we'll call you back. That's if we don't answer the phone when you call in. Anyone who will take the time to do this, in addition to that 50% off that I just showed you, I'm going to add another pretty nice discount to that and make it really attractive for you to join our program if you feel like this is a good fit. Now, I want to leave with one last final thought. Actually, okay, I'm sorry, two final thoughts. Number one, I want you to understand that if you email and ask about discount pricing and you still determine that this is not the right fit for you, I wish you nothing but the best of luck. I'm not asking anyone to join something because they feel like they got talked into it, or if they just don't think this is a good fit for them. But if you think that you might be able to benefit from what we're teaching here, give us a chance to teach it to you. I'll give you a great discount on the program in addition to what I already showed you. And then the final thought is this. I don't want anyone to join Safe Option Strategies and feel like they're trapped. Folks, we give an unconditional money-back guarantee on this program for 30 days. And beyond 30 days, if you do not believe that you're getting better results as a result of learning this stuff, if you're not getting better results in your portfolio, better profits as a result of learning this, without any additional charge, we will work with you one-on-one. And if we cannot help you improve your trading, we'll give you your money back. And that's a guarantee that goes beyond that 30 days. In fact, there's no expiration or no time limit to that guarantee. And we put that in writing for you. So not only can we help you take the risk out of trading, or at least a lot of the risk out of trading, and still make great profits, but I want to take the risk out of making a purchase like this. I know a lot of people buy education programs and they just don't live up to the hype. They just don't do what you were hopeful they would do. And we don't want anyone to join Safe Option Strategies and then feel that way. So I want you to know that I wish you the best of luck, even if this is not a good fit for you. But I want you to know, if you give this a try and give it an honest try, we will make sure it works for you and makes you more profitable, or we will give you your money back. And we'll put that in writing for you as a guarantee. I genuinely hope to hear from you. Send us an email, fill out that form that's right underneath this class on the website, or give us a call. And I'll tell you about the additional discount that we'll give on top of those 50% off prices that we're doing until the end of the month. I genuinely hope to hear from you. Thank you. Bye-bye.